We have another prime minister. Can you believe it? We have another prime minister. And because we have a new prime minister and a new administration getting up and running, you might be wondering, should you wait to buy a new home considering all of the uncertainty? Well, I'm going to go through that with you today. I'm going to give you some important information, help you understand why waiting might not be a good idea because politics change, things change, but the housing cycle remains the same. So the biggest mistake I see a lot of buyers make is they often ask, should I wait? The bigger question is, will waiting actually be beneficial to you? If you want the answer to that question, make sure that you watch until the end because I'll be giving you the details that you need to make an informed decision. Remember, I'm not here to give you financial advice, legal advice, or tax advice. I'm here to just talk you through products and maybe help you to ask questions that you hadn't asked yourself. As always, your home is at risk if you don't keep up the repayments on your mortgage. Make sure you watch all the way until the end and make sure you like and subscribe because this is important. Okay, so we have a brand new prime minister. As of the airing of this video, he's been in office for about 2 weeks. A lot of things are changing. A lot of people are asking questions. My name is Lindsay, and I've been in finance for over 30 years. So when I give you information, I'm not just talking from the perspective of a mortgage broker. I'm also thinking about other things, which is why this video is really important. So history tells us something. If you notice who this lady is, it's Liz Truss. She was a very short-lived UK prime minister and impacted the housing market incredibly. So this should teach you that house prices don't move in a straight line. There's a lot of different things that can happen. They go up, they go down, they stay the same. You can't time the market, but what you can do is make informed choices and make sure that you have the right information to make the best choices for you and your family. If you never get on the property market, you can't benefit whether the property market moves up or down. So I find a lot of people, I think they're being really smart by just looking at interest rates or looking at political impact on the housing market, but they never consider what's in their pocket. A good friend of mine once said, the economy is what's in your pocket. So the reality is every day someone is losing a job and somebody else is getting a promotion. Somebody is inheriting money and somebody is getting property locked up in probate because they don't have a will. What am I saying? The point is this: your financial position is what's important, not necessarily what the media is telling you you should do, but look at your financial position and make your decisions based on that. By doing that, what you'll find is you can make the best choices for you and your family. So understand that history can tell you that house prices generally tend to go up, but it can't tell you what's going to happen in your personal finances. We do know this: people don't wait to buy, they buy and wait, because no matter what you do, the market is going to change. So once you own a property, there's lots of things you can do. You can refinance, you can take out equity, you can remortgage, lots of different things you can do, but you're not if you're not even on the property ladder, then you're limited. So if you wait thinking that you're going to wait for the perfect financial situation, house prices may go up. And if that happens, that means you're going to need a bigger deposit. So don't wait to buy and wait if your circumstances today tell you that you're in a good position to buy, because waiting can have consequences. Just like not waiting can have consequences. Either way, you want to look at your personal circumstances, but not just wait because you think you're going to outweight the market or that you're more clever than analysts. You have professional property investors who can't figure out what they should do. But what we do know is right now it's a buyer's market. And it's simple. It's just basic supply and demand. It's economics 101. Right now, what you're finding is because of buyer sentiment, a lot of people are cautious about buying. And because they're cautious about buying, it means that we don't have a lot of people chasing properties. So you have a high demand, but you have a lot of people that are looking to sell. So the demand continues from first time buyers families, and investors. So you have people who are looking to buy houses. A lot of people are looking to sell houses, and we don't have enough houses. So now, if your financial situation is right, could be the very best time for you to purchase a property. It's a buyer's market right now. I have so many clients right now who I'm telling that you need to start looking, you need to start making offers. But first, obviously, you need an agreement in principle. But start looking because it's a buyer's market. Properties aren't selling right now. People are reducing prices. You have chains that are falling apart. So there's a lot going on. If you're looking to buy, now's a good time to consider buying. You can negotiate, you can get concessions. There's a lot of things that you can do, especially because the interest rates aren't always that favorable to first time buyers. But that could mean that you, if you are in the right position, can get a really good deal on a property. More homes, as I said, buyers have greater choice because there's more homes available on the market right now. A lot of buyers have more choice. So Zoopla reports that many sellers are adjusting their asking price because their property is not selling. Homes are taking longer to sell. This is another thing. So you have people potentially that are in a chain. And so they're waiting for somebody else to buy their house in order for them to buy a house. That's what a chain is. And because chains can become a little bit complex, it means that house prices are going down because people need to sell in order to not let the chain collapse. So, in simple terms, go out there and look for a house if you're in the financial position to be able to purchase one. And if you're a first time buyer, that's going to give you an unfair advantage. Why? Because you're not in a chain. So I've seen it time and time again where we have a house that we're going after for a client and they say, we have an offer, but the person is dragging their feet. And on average, my team is going to get our clients across the line about 3 weeks quicker than the industry average. So, what I can say to the seller is look, I know that the offer that we made is a little bit lower, but this is a deal that's ready to go. We have a solicitor, we have everything in line, we have the funding ready. So, you can wait for this person that's offering you an extra 5, 6,000 pounds and they're in a chain, so it could all fall apart. Or you can go with this first time buyer who we've already got the solicitor instructed, we already have the finance lined up, we've got the agreement in principle. I, as an amazing mortgage broker, have checked the criteria so the agreement in principle will turn into an offer. And the other thing that I do is I check the property. And because I check the property, we'll know and make sure that the lender will actually lend on that specific property. So now is a great time. Don't wait. Have the conversation. Talk to your broker because properties are taking longer to sell right now than they have been in previous years. Buyer sentiment has changed because people are looking at what the media says, which often is doom and gloom. So they want you to click on that thumbnail. They want you to watch that video because they're saying lenders won't lend and the property market is collapsing. It's all calamity. Stay calm, do your research, speak to a broker. Because the sentiment that a lot of people have isn't based on their individual circumstance. It's really just based on a lack of knowledge, which is why I make these videos. I try to make videos that I'm talking you through things, giving you information that you as an individual can assess your individual circumstances rather than just responding to hype in the media. Because you might be in the perfect position to buy, whereas someone you know may not be. So the sentiment of buyers has a lot to do with it, but you need to focus on you. Like they say in the Bronx, you do you. Don't worry about what somebody else is doing. Waiting has its cost too. People forget that waiting can cost as well. So why can waiting cost? Because if prices rise, you'll need a bigger deposit. If rents rise, you'll need to spend more every month while you're waiting to purchase. If your circumstances improve, that's great. But what if they don't? Waiting may supply a delay to your goals, and there's no risk free option. So there is no risk free option. No matter what you do, you're taking a level of risk. And remember, historically speaking, house prices do go up. Sometimes they go down, but in the long run, house prices tend to go up, which is why people view it as a good investment. So we're not talking over 2 to 3 years, but we're talking over 10, 15, 20 years. This is why a lot of young people make the case that, well, my parents and grandparents were able to buy at a really low price, and now their house is worth hundreds of thousands more. But the thing that they forget to mention is that the parent actually purchased the house. There were still some people in that same economy with similar circumstances who didn't buy, and they're not benefiting or reaping the rewards of making that purchase back then. So, yes, 30 years ago, the income multiple to purchase a house was a lot lower. But keep in mind, there are still some people who didn't buy. So don't wait thinking that waiting is always going to be the best solution, because there is a risk in waiting. I'm not telling you to go out and purchase something if you can't afford it, but if you've talked to a mortgage broker, you will realize if you can afford what you want or what you need to do to get in a position. Don't try to time the market. You have professional investors, people who understand property inside out, who still can't time the market. Earlier, I talked about Liz Truss. So, no matter how well prepared you were or how you can time the market, when Liz Truss came in and made the changes she made, no one could have predicted that. So, what you want to do is make sure you ask yourself, can you afford the property? So, what's your situation? Are you financially ready? Is it the right home? And can you afford the monthly repayments? This is why I frequently say to people, don't focus purely on rate. Rate is relative. During COVID, when rates were historically low, if I had put an interest rate in front of somebody starting with a 3 or a 4, they'd have said, you don't know what you're doing. That's too expensive. And they would have been right. Now, if I put an interest rate in front of someone that started with a 3 or a 4, they'd be like, that's a great rate. So, what you want to think about and what a good mortgage broker will cover off with you is it affordable? Because once you're on the property market, the property ladder, and once you have payments that are affordable, you do have the option of overpaying, which can reduce your term and reduce the amount that you pay in the long run. You have the option of refinancing. You have a lot of options. But if you focus purely on rate, what you might find is you never get on the property ladder and the rate will never be perfect. And keeping in mind that when the rate goes down, a lot more people are going to be buying. So guess what's going to happen? Property prices are going to go up. So for the same house, you're going to be paying more. So even if the rate is lower, you're paying more. You need a bigger deposit. You may not even qualify for it. So don't focus purely on rate. When your mortgage broker is talking you through the products, he'll explain to you, or she will explain why the rate is what it is. Maybe you have some bumps in your credit, so you're with a specialist lender. Maybe there are other circumstances like you're self-employed or you're a contractor paid through an umbrella company. So the mainstream lenders won't lend to you anyway. So those rates you're seeing online don't apply to you. So a good mortgage broker is going to go through everything with you and explain why the rate is what it is. Because remember, rate reflects risk. So what that means is if you're a higher risk customer, the lenders who will lend to you are going to do it at a higher rate in order to make sure that they mitigate the risk. So don't be purely focused on rate. Just see if you can afford it. And those questions are going to matter more than if it's Andy Burnham's government or if it's somebody else's government. You need to be focused on you. So I get asked a few questions all the time. And these are the frequent questions, not just when it comes to the political environment, but just getting a mortgage in general. So one of the top questions is, can I buy with bad credit? Do I need savings? Can I buy if I'm self-employed? And how long does the process take? In every case, the answer is going to be a little bit different, but in every case, you're going to need to want to speak to a mortgage broker. So let's break that down. Can you buy with bad credit? Yes. Is the rate going to be a little bit higher, maybe? Probably. But you can buy with bad credit, but you don't want to just take my yes. You want to speak to a mortgage broker. Do you need savings? Yes, you do need money for the deposit. Even when you see these, like 98% mortgages or 95% mortgages, when you read the fine print, there's something else attached to it. whether it be that actually, yes, you only need a small deposit, but somebody else has to be joint borrower, sole proprietor, or somebody else has to put a deposit in a savings account to facilitate the mortgage for the first 3, 5 years. You might find that a lot of those things also require a 5 year fixed term. And that's because if you're buying with a really small deposit, you don't have that much equity in the property, which means if property prices go down, which currently they are, you might be what they call upside down in your mortgages, in your payments. So being upside down means you actually owe more than the house is worth. So this is some of the fine print that the criteria and the things that your broker is going to be looking at before they say that this particular product is good for you. So, can you buy if you're self employed? You can buy if you're self employed. You will find that most lenders want 2 years, SA 302, and tax overviews. You do have lenders that will take one. But again, the ones that are going to take one, the criteria may be a little bit more tricky or the interest rates might be higher. So, when you're asking the question, can I buy? Do I need a deposit? All of these things are questions that your broker can answer for you specifically, as opposed to getting general answers to specific questions. Because if I give you a general answer and it's wrong, it doesn't really help you. What you want is a specific answer to your specific circumstances. So, yes, I get asked a lot of questions, and the questions that I get asked tend to be the same. And the answer really is always going to be the same thing, which is speak to a mortgage broker. Focus on what you can control. So it is great to have these really high academic conversations about stress testing and interest rates and things you can't control. But the things you can control are my CID formula, CID, credit, income, deposit. So you can control your credit by making sure you don't take out needless credit. So the first thing that you want to do if you're considering buying a house is understand how credit works. Most people think it's just about your credit score. What I'll tell you is it's about your credit profile. So get your credit report from checkmyfile.com. It's going to give you your Equifax, Experian, and TransUnion report. Why is that important? Because not every lender is going to report to every credit reference agency, and the timing will be a little bit different. I've seen it time and time again, where on one report it says that there was a late payment in January, and on another one it says February. And this is important because lenders sometimes have a window of time where they'll say, we can't have had any missed payments, late payments. So if we're just looking at your Equifax and it says January, and we decide we're going to move forward, but in fact, on your Experian, it says February, it could mean that you don't qualify for that mortgage. So credit, you can control credit. You can control it. Income, kind of can control that as well. What I mean is if you are looking to buy a house, but you're also considering, becoming a contractor or you're considering going self-employed, maybe you want to get the mortgage first. Because if you've just become self-employed, it's going to be difficult or impossible to get a mortgage because you don't have at least 1 year of tax overviews in SA 302. So you can't go on what you project you'll make. The lender is going to want to see what you've reported to the government. So it's going to take at least 18 months. Similarly, if you're considering becoming a contractor, I know a lot of people do this because you can make more money in your pocket, but lenders quite often won't lend if you've just started a contract and you've just started contracting. It's also difficult if you're paid through an umbrella company. I'm not discouraging either method. I'm just saying this is something you can control. And deposit, you have a lot of control over that. So how you save, where the deposit is coming from, these are also things that are super important. They're important because you need a deposit to make the purchase, not just for the house, but for the other fees that are involved. The other reason why it's important is some lenders will not accept gifted deposits for more than a certain amount or from certain people. So they might say, well, we'll take it from a parent or a sibling, but we won't take it from a friend. So these are the things you can control. And maybe instead of worrying about what the government's going to do, which you can't control, you should focus on the things you can control, which is credit, income, deposit. You can control those three things. So make sure that you're keeping an eye on those things as you progress with your mortgage journey. Date the interest rate, marry the property. So this is important and it might sound weird, but what I'm saying is you can usually change your mortgage later through the remortgage if rates fall. You cannot go back and buy the same property at today's price as it's appreciated or been sold. So what does that mean? As I said earlier, you don't want to focus just on interest rates. Interest rates are going to go up, they're going to go down. But that house you're trying to buy today is probably going to be more expensive in the future. Probably 2 years, 3 years, 5 years. Or it might not be available because it's already been sold. So, what you want to do is have the conversation, find out if the property is affordable, get on the property ladder, and then benefit from the fact that historically house prices go up. So, what are the next steps? Let's look at the next steps. If you're worried about what's going on with the government, if you're worried about if prices are going to go up or down, it's very simple. Talk to a mortgage broker and find out how big a mortgage you can get. So make a ridiculous offer, keep saving and outgoings low, protect your credit profile. So let me major on this idea of making a ridiculous offer. So you've talked to a mortgage broker. The mortgage broker's told you that based on what you've told me understanding your income and your outgoings and your credit profile, this is how much you should be able to borrow. And if you're talking to me, I'll be able to say with what lender. So now you know you can get a house for 470,000. Tip: do not go and tell the broker, the estate agent, that your range is 450 to 480, because then they're going to show you houses way beyond your budget. So you know you can buy it 470. You see a house that maybe has been sitting on the market for some time. You make a ridiculous offer. Maybe you go in at 430. The worst thing that can happen is they say no. I find that a lot of first time buyers think that there's a lot more of a rigid framework to making an offer. So when they see on a Zoopla or Rightmove listing that it says offers in excess of 470, they think there's a legal or moral responsibility to offer more than 470. That's not actually how it works. You can offer whatever you want. Now, realistically, they don't have to take it, but you can offer whatever you want. And what I mean by making a ridiculous offer is keep in mind that the price listed on Rightmove or Zoopla is just a marketing scheme. That's all it is. A house's true value is what someone will pay for that house. The example that I always use is you might see a house in a neighborhood that is very close to your support network. So if you have kids like me, you might find a house that's close to a grandparent. So that house is going to have a higher value to you than it would be for somebody else that's just looking for a house. So that house that's listed at 470, as you negotiate, you might be willing to pay 480, 475, where somebody else, where it's just a house, won't want to go over 465. And this is important because when you see a house listed, you need to figure out what you feel you would pay for it. What is the support network there? And what is the reason why you're buying in that area? Maybe you're trying to get your child into a specific school, so it might have a higher value to you. So make the ridiculous offer. The worst thing that can happen is they say no. And you should always have a walk away price in mind. That way they don't keep pushing you up and up and up. The other thing that I would say that as you're looking is keep saving. I would recommend a lifetime ISA if you meet the criteria, and if and only if you're planning on buying in more than 12 months. Lifetime ISAs are amazing. I'd also say keep your outgoings low. So don't keep getting credit and purchasing new things. Make sure that your bank statement is as clean as it can be. Life happens. I'm not saying that money's going to fall out the sky, but if you're preparing for a mortgage, you do want to show financial discipline and make sure that your bank statement is clean. You don't want payday loans. You don't want money dropping into your account from alleged loans that people owe you. Keep it clean. Don't raise any red flags for the lender. And red flags are cash deposits into your account, multiple transfers between your account and random people, people paying money into your account. These are all things that are going to delay the mortgage process or maybe prevent the mortgage process, or mean you have to go with a specialist lender, which means you're going to have a higher rate. And protect your credit profile. So don't do any joint applications with anyone that you're not going to be doing the mortgage with. Because when you do a joint application, or maybe when you co-sign or become a guarantor for somebody, it's going to create a financial link on your credit report. If you are a guarantor for somebody, what you're saying is if they don't pay that thing, you're going to pay it for them. So you want to avoid that, because that's going to put you in a situation where when we're working out the affordability, we're going to have to take that payment out. I've seen it time and time again. People are dating and, they love the other person. They're not married, and they, apply for a credit card together. They break up. And in the future, that financial link is still there. That other person gets defaults, and then it impacts the credit of the remaining person. So be very careful. Protect your credit profile. Prepare, plan, make sure you speak to a mortgage broker. And my final thoughts, I'm just going to go through a few final things that I would say. No one knows exactly what's going to happen in the market, but we do know for the most part that property prices go up in the long run. Don't let politics stop you from making a long-term financial decision. Make sure you speak to a mortgage broker. Make sure you're making informed choice. Make sure you're not getting your financial, legal, or medical advice from TikTok. Always speak to someone that you can be open and honest with, someone who is a professional, licensed professional, who's going to put your needs and your family's needs first. As always, your home could be repossessed if you don't keep up the repayments on your mortgage. I don't make these videos to replace you speaking to a professional, but hopefully I've given you information so that you can ask more informed questions. My name is Anthony Lindsay. This is my QR code. If you'd like to book an appointment, you're going to be speaking directly to me. It won't be a VA or a PA. You will get the answers that you need. I don't charge for the conversation. I make these videos to share financial information that, as I said, you can be a more educated consumer. Always speak to a mortgage broker. If you've watched this video and you appreciate the information that you have learned, make sure you share it. Make sure you like it. You'll see this is a really small channel. I don't get tons and tons of views, and that's okay, because that's not what I'm here for. I'm not an internet influencer. I'm a mortgage broker. So if you've liked this video, just leave a comment. It would really be encouraging. And also make sure you subscribe, because when you subscribe, it tells the YouTube algorithm that what I'm saying is valuable and people appreciate it, and it will put it in front of more people. Not that I can become an influencer. I don't make my money from making the videos. I make my money from doing mortgages for clients every single day. So if you're a first-time buyer, if you're a skilled worker visa holder, if you're a portfolio landlord and you want to speak to someone that's going to move your deal forward, give you the answers, and not charge you in advance, make sure that you reach out, and make sure you watch my other videos. As I said, this is my QR code, and you can reach out to me. An appointment is free, and you'll get a booking form. You can select a time that works for you, and I will see you then. Make sure you like, make sure you subscribe, and make sure you share with friends and family.